Good morning from the For the See Me. This is Chris Robinson with your Traders Exclusive comment here today, Tuesday the 3rd. Well, we're into May, starting off the month. Yesterday was a positive in the grains. I'm going to talk about corn, wheat, and beans, and a little bit about livestock, then I'm going to hop. We've had the best move in soybeans. We've come $1.94, almost $2 off of our April 1st low. An excellent move in July beans. We went up today to 1057, and we've had what looks to be like the beginnings of some sort of a correction. The important thing is we are at 18-month highs, back to November of 14. So this was a great rally. If you've been following along with me, I've talked about the rally and how it was led up and what created it. The money flow was probably the biggest issue. You've had tremendous money flow, not only in U.S. commodities, but especially in Chinese commodities. There's a lot of interest in China in owning physical commodities. You throw it all into a ball of wax and you've got 18-month high in soybeans, when fundamentally there's no real issue out there other than too much rain in Argentina. Now, we're going to get real numbers on the 12th or 13th from the USDA. A lot of people think that maybe anywhere from 5 to 15 million metric tons of Argentinian soybeans have been lost because of the floods down there. Now, every time you look at an article, generally it's got a bullish tone to it. People like a bull market. My experience has been when you start hearing about it on an almost daily basis in the general financial media, the story's probably run its course. There's an expression, the bull needs to be fed. If we don't continue to get bullish movement or bullish information, bullish fundamentals, where are these funds going to go? They're long 160,000 contracts of soybeans. We've seen a lot of heavy volume. Last week we traded the entire soybean crop about Tuesday or Wednesday. The volume was that big. We've seen huge volume in the metals as well as a side leg. You've had tremendous volume in gold. So a lot of interest. That may be the sign that maybe we've come too far too fast in this commodity move. Time is the only thing that's going to tell. The second thing I want to talk about is the vulnerability of corn and wheat. This rally saw these managed funds go from being short a couple 100,000 contracts of corn to long 80. So in about 3 weeks' time, the funds bought 300,000 contracts of corn. And the surprising thing was we only rallied 50 cents. That to me was a sign of like the rally was suspect. To have that much volume and have that much, of a flip in the position, and to only have corn rally 50 cents, the number I would watch would be new crop corn. New crop corn, we've only been above $4 twice in the last 6 months. That's going to be the area. We really have to get new crop corn above $4 for 3 or 4 days. We've got to get a substantial move above there to I really think that there's a story in corn. In the meantime, what do you have happened today? Well, just a little bit of a flush lower, and then we're going to finish up talking about wheat. Wheat has had the worst fundamental story. The yields have been very good here in the U.S., even though they planted less wheat. There's no fundamental story out there that is driving the price of wheat. The Russians have been active sellers, and even though our U.S. dollars come down to 8-month lows, it's still less competitive than the Black Sea wheat. So put that into a ball. Wheat is probably the weakest of all three. Right now, the funds are still short about 60,000 contracts of wheat. We'll see how they finish the day. Those three things, I think that if you boil it all down to one thing, we've had a really good pop led by the soybeans. Is it going to continue? We're going to have to get a fundamental story, or we're going to have to get fresh buying to continue to push this thing higher. So it may be giving you an opportunity to either try and do a counter trend or look for a break to buy. But the action out there has been pretty much 95% driven by money flow as opposed to fundamentals. So keep harping about that. I'm going to flip over real quickly to talk about livestock. The funds are long live hogs and they are long fat cattle. We've made what looks to be a potential seasonal low. A lot of people are looking for whether or not this beginning of what looks like a rally can hold through. So I would look at those charts. I would look at the recent major lows in the hogs and in the fat cattle and look, and those are giving you opportunities to try and catch a turn in the market. No matter what you do, if you're selling into the rally or if you're trying to get long on a break, you've got to stay disciplined. These markets move very, very quickly. Lots of times they move for no real reason that you can justify. So whatever you're doing, if you're getting long, make sure you've got a sell stop. If you're getting short, make sure you've got a buy stop. And if you remain disciplined, these ag markets, given what's going on in the world, are giving you good opportunity to not only day trade, but also try and catch some major swings. I would really take a look at soybeans, 18-month highs. Are we going to extend it higher? That's probably the best opportunity out of all those markets. From the 4 of the CME, this is Chris Robinson. If you're looking for help, give me a call, look me up on the web.